New jobs numbers coming in today. They come just a day after we got a look at inflation numbers. That jobs report showed 203,000 Americans filed jobless claims last week, up about 1,000 from the week before. And again, it comes on the heels of the government reporting that inflation rate dropped slightly last month to 8.3% year over year. Now, that was the first decline after several months of increases. Analysts say record gas prices are among the biggest factors driving inflation right now. Financial contributor Alexis Christoforous joins me now for more on this. And Alexis, I want to first start with the pandemic, because we hear the White House now reporting 1 million lives lost to COVID-19. How is the pandemic, how did it and how is it still affecting our economy?
Oh boy, in so many ways. It's had so many tentacles. And I'm just going to start with the job market. We still have about 1.5 million fewer people working now than they did pre-pandemic. And a lot of people still have not returned to the workforce, even though we talk about the jobless rate coming down. So many people still wary about returning to the office. That's a big challenge. So I think the way we work and the future of work has changed forever because of the pandemic. Also, of course, supply chain issues, a big reason why consumer prices and wholesale prices are so high, and we're having a problem with inflation. Now, of course, more lockdowns in China because of COVID. Again, another challenge, another hurdle for our supply chains. And also higher rents, another byproduct of this pandemic. And, of course, as we were just talking about in that previous segment, a larger burden on our healthcare system.
Now, the markets have been declining. The Fed already raised rates. It's possible they'll raise them again. So how does this change the investment landscape now that investors can't bank on bailouts or stimulus measures, and it's a lot harder for companies to get cheap debt?
That is all true, but for the average investor, these big sort of scary times in the market, best to just sort of close your eyes and look the other way, because the worst thing you can do is try and time the market. You know, if your time horizon is very short and you need your money in the next 1 or 2 years, you may want to try to limit your exposure to the stock market right now. Look for other places. Holding on to some cash is not a bad idea ever. You can look to the bond market because you're getting better and higher interest rates there. And guess what? For the first time in a really long time, Diane, we're making more money if it's in the bank. Savings accounts, certificates of deposit, also getting a little bit more interest. But if you're in this market for the longer haul, for 3-5 years or more, these really scary times, these big sell-offs can be seen as buying opportunities. You can buy once highly valued companies at a discount.
And what's your take on this latest jobs report showing that unemployment claims fairly flat week over week? What does that tell you?
No big change there. These jobless claims continue to hang around their lowest level since 1970. And what that tells us is what we already know. We have a very tight labor market. So companies are going to have to continue to raise wages and do what they can to get people to take these jobs. There were 11.5 million job postings the other month, about 2 available jobs for every person looking.
All right. Alexis Christoforous, thank you as always.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.